Hello everyone. Welcome you all to the session of Banking and Financial Services class. I am Impa Biliyappa, Associate Professor, Department of Management Sciences, Maharaja Institute of Technology, Mysore. Previously, we have discussed Unit 3 where we dealt with the merchant banking concepts, its categories, services offered, issue management, post and pre-issue management, issue pricing, preparation of prospectus, issue management, underwriting, private placement, book building, that is different types of pricing, that is book building and fixed price issue. In today's class, we will be beginning that is NBFC, that fourth unit, NBFC and overview. In the beginning, in the sense, Manoj sir have already discussed NBFC's types and its regulatory framework. In today's class, we'll be discussing the concept microfinance. In microfinance, we'll be learning its meaning, advantages and disadvantages, models. There are 4 models in microfinance. One that is 4 types of models, and then we have services and challenges. These are the few concepts which we'll be discussing. This unit comprises of 4 different divisions. One is about the NBFC and its overview, where we discuss the types and regulatory framework. Then we discuss the microfinance. Then we discuss the topic of leasing. We discuss the topics of hire purchase, and there are problems also in this module. So to begin with, let's know the meaning of microfinance. So microfinance is a banking service provided normally for unemployed or low income individuals or groups who otherwise do not have any access to the financial services. So sometimes it is also known as microcredit, where they provide small business owners, where the small business owners or entrepreneurs are provided the access to the capital. So if they need any kinds of funds or capital, they can get access towards it. So often these are small and individual businesses don't have access to the traditional kind of banking services, where the procedures are high and they have certain criteria for giving the loan. So those who cannot avail the loan from the traditional kind of banking or any major financial institutions, for them the loan is easily accessible in microfinance. So it might be loan, it might be insurance or any other kind of investment. These microfinance will help these small investors or businessmen to grow. Okay, so microfinance provides loans, credit, they give access to savings account, insurance policies and money transfers for the small business owners or entrepreneurs. So this is why quite famous in the developing countries, where the countries which normally concentrate on the rural areas, for them these microfinance would be much more helpful. So let's move on. This was a meaning. So let's move on to the advantages and disadvantages. So coming to the advantages and disadvantages go hand in hand. So let's discuss the advantages first. So what are the benefits? So access to the capital. So as I've told in the meaning itself, the people who do not have, the businessmen who do not have access to the finance, do not have access to the finance in the traditional set of banking or major financial institutions, for them easily getting fund in microfinance is quite easy. Okay, so access is good comparatively to the major banks. Then better loan repayment rates. Yes, this is normally microfinance is availed forming a group of people. So in the group of people, you know each other, so that kind of trust will be there, and your activities should not harm the others' activities. When you have these kinds of intention, it'll become a like must in order to repay the loans. So these repayment rates are very good as people know each other, okay, in the group. And then you have extending education and health. So extending education and health in the rural areas, due to the non-availability of funds, people hindered in their education and health. So due to the funds which is flowing in the form of group or individual in this source, people would get better access to education and health. Okay, then sustainability. In rural areas, the managing the day-to-day expenses itself sometimes poses a really big problem. Just take the example of COVID. Many people lost their jobs during COVID. Even in urban areas, the sustainability was difficult. Now it is coming to neutralizing. But in rural areas, it is very much difficult to run their daily life. So to manage these expenses, the day-to-day expenses, the working capital of small businesses, it's very difficult to manage. So with these small funds which you get, it's easy for you all to sustain over a period of time. Okay. Then improved income and nutrition. Yes, people when they start investing in their business tend to grow. Okay, due to which the income flows in, and also the nutrition food wants the spending on the nutrition food, or the knowledge or awareness about the nutrition, the awareness which is created in the rural which is created among the rural people, that also get enhanced. So it might be the nutrition, about the nutritional value or about the improved income. The rural areas are concentrated more. These are certain benefits pertaining to the microfinance. Let's discuss some few of the disadvantages. As I've already told, they go hand in hand, and where there are advantages, there are disadvantages too. Some few of the disadvantages are over indebtedness. So this is like where you get funds easily, so you tend to have you get into an habit of taking debt. Once the debt starts growing, the risk management would be difficult, and it's very difficult to repay the debts at the due dates. So when you can't repay the debts at the due dates, your interest keeps growing on, and it will lead to over indebtedness. And due to that, there might be problems in the personal life, as well as it will have an effect on the mental health. Okay, why would it be difficult? Because another disadvantage is it is having higher interest rates. So this microfinance, when compared to the mainstream banks, that is, it might be the public sector banks or commercial banks, the interest rate charged is high, comparatively high. Okay, so that is another disadvantage. Then the loan size is very small. They give small loans, few few disbursements. So when you have this small size of few disbursements, the size of the loan decreases, and that would not be much helpful for many people who are targeting for a higher amount of loan. Then you have group guarantee. Group guarantee is also like a disadvantage, because you trust people and you guarantee to make the payment if they don't do. But few people take the advantage of that, and they do not pay the debts. So one person's non-payment of debt will become a burden on the other members of the group. So that is group guarantee. It is quite risky, where you need to pay for others' debts if they don't. Okay. Another one is widespread dependence on the Indian banking system. So as the Indian banking system is almost influenced by the economic factors, monetary policy, fiscal policy, budgets, all these influences the mainstream banking, and the mainstream banking activities, rules, regulations will have an impact on the microfinance. So it is very majorly depending on the mainstream banking system. Okay. Then you have inadequate investment validation. Yes, there is no particular process, like unlike the traditional banking, there is no particular process of valuation. That is how much loan need to be provided, to whom the loan has to be provided. Such kind of proper process is not there. So this would sometimes lead to the inadequate investment validation. There is no proper validation of investment. There is no particular procedure for its valuation. You cannot rely. Whoever is partial, they tend to give more loan to that particular person. There is no particular process. Okay, this is also one of the disadvantage. And then you have lack of enough awareness of the financial system in the economy. Yes, people in rural areas normally don't have much awareness about the loans provided, the saving schemes, or the training or educational schemes, educational trainings, or the training which is related to handicrafts, or being self-independent. So there is the kind of schemes, facilities which are there from the government. People are not much aware of it. So this is also lead to lack of awareness, will also lead to a disadvantage of microfinance. And then you have regulatory issues. Yes, there are lots of rules and regulations which is governing the microfinance, and keeps on changing. This also will influence the framework of your microfinance. And last one is choice of appropriate model. Yeah, models I'll be doing next. There are 4 different models, which is joint liability, self-help group, Gramina model, and cooperative societies model. Like this, there are 4 different models. And whenever you discuss these models, according to the group's objectives, you have to discuss and select the right model for the right group. So normally this microfinance is like a pooling of funds and dispersing of funds in group. So whenever you form a group of the people who you trust. So once you form a group, you should decide the objective of that particular group. Normally people having the same kind of economic background or same kind of purpose of activity, or based on that you form a group. So when you form a group, you have to fix the objective of that particular group. What is the objective of the group? Is it like savings? Is it like providing training to the women? Or is it like availing loans from the bank? Or availing facilities from the government? What is the objective of that particular group? Based on the objective of the particular group, you have to select one of the model. People who are not aware of these models and aware of the procedure, aware of the concept of this microfinance, for them deciding on the initial stages which model is preferably or which model is preferable or which model is suitable would be difficult. That acts as a disadvantage. So these are few of the advantages and disadvantages pertaining to the microfinance. So advantages are also there, disadvantages are also there. Keeping in mind only the advantages and crossing the hurdles of the disadvantages, you should avail the facility of microfinance. So moving ahead with the models of microfinance, there are 4 models in microfinance. Let's individually discuss about the models. The first model is related to joint liability group. The name itself is telling it is joint liability group. So individuals or group borrowers are financed directly from the banks without any intervention, that is interference or intervention and facilitation of any non-government organizations, that is NGO. Without any interference of any middleman, it is directly being financed by the banks. That's the reason we call it as joint liability group. Normally this is an informal group comprising of 4 to 10 individuals coming together for a particular purpose of availing bank loan either singly or through the group mechanism against mutual guarantee. So they have the concept of mutual guarantee, where one person guarantees that the other person, if he doesn't pay, I am going to guarantee you that they'll make the payment. So where mutual guarantee is there. So this joint liability group members would offer a joint undertaking to the bank. They give an undertaking to the bank that enables them to avail loans. Okay, the joint liability group members, they are expected to engage in a similar type of economic activity like farming or crop production. Okay, they have to engage themselves in a similar type of economic activity. So working in a joint liability group, members should be of similar socio-economic status and background, carrying out the farming activities, or who agree to function as a joint liability group. Okay, the group must be organized by the like-minded farmers and not imposed by any of the bank. The bank should not impose, okay, these many people need loan, so you form a group. That should not be no compelling and no imposition. It should be by their willingness, and the like-minded people who think alike, they should form a group. The members should be residing in the same village or area and should know each other and have trust in each other, so that it is joint liability. No, the other person is going to give a guarantee for the person who has taken debt. So they should be having mutual trust. They should trust each other. They should be knowing each other, and they should be knowing such that they should, it is well enough to take up the joint liability or individual loans. Okay, joint liability for the group or for individual loans. So that is about the first model where one person is going to guarantee the other for the purpose of loans. Okay. The second model is about the cooperative society model. Okay, we call it as cooperative society model. Here, borrowers are financed directly with the facilitation extended by the formal or informal agencies like government commercial banks and microfinance institutions like NGOs, non-banking financial intermediaries or cooperative societies. Okay. The cooperative society, as per the provisions of the Cooperative Societies Act of 1912, at least 10 persons having the capacity to enter the contract with common objectives, like common economic objectives I told, no, like farming, weaving, consuming, etc. Okay, can be formed as a cooperative society. They can these similar kind of economic activity, who are performing the similar kind of economic activity, they can form this cooperative society. So here in India, the model 2 is consists of 3/4 of the total microfinance. So this is like a famous model, okay, where activity, joint liability, self-help groups are formed and nurtured by facilitating agencies. The facilitating agencies will help and are linked directly to the banks for the purpose of receiving credit. So these are like maybe the NGOs or microfinance institutions. These are like facilitators, but when it comes to the credit, they are directly linked to the bank. Okay, they don't form as an intermediary, but they are like facilitators. That is the banks and NGOs and cooperative societies. They are like facilitators for the people who are in need of fund. Okay. Then comes the third one, which is the self-help group model. We normally call it as SHG, that is self-help group. So here the financing takes place through NGOs and the microfinance institutions as facilitators and financing agencies. In the previous model, we just saw that they were only the facilitators and not the providers of the credit. But here in this model, they are the facilitators and also the financing agencies. So self-help group model, that is in SHG model, the members form a group of around 20 members. The group formation process may be facilitated by the NGO or any other microfinance institutions or the bank itself. The bank can also initiate, and it may involve any kind of traditional rotating savings, like getting the savings or credit groups or any other locally initiated grouping. Anything is possible in this SHG. The characteristic of SHG is where they form a group of 10 to 20 people. Preferably, they go for women workers, having a similar kind of socio-economic background, united for a common cause. Okay, there is no need for registration and all, group functioning, registration, discipline, saving, borrowing and lending. This is not that important, but they form where we say homogeneous girls. You might have learnt in your Hathron studies. So the homogeneous women, that is having a similar kind of background, socio-economic background or similar kind of activity they do, they form a group and try to avail the facilities. That is about the SHG model, which was the third model. And the last one is the fourth model. Here fourth model is where it is dealt with the Gramina model. We call it as the Gramina model. So we have learned the cooperative society model, then SHG model, and this is the fourth one, which is the Gramina model. In the Gramina model, we can see that the Gramina model is introduced or started in 1976 by the Nobel laureate Professor Muhammad Yunus in Bangladesh. So that was the first place where they started this, and today they have more than 2,468 branches only in Bangladesh. It was started as one branch, but it grew like really, okay, where with the staff of 24,000, more than 24,000, serving around 7 million, more than 7 million people, borrowed from 80,000, more than 80,000 villagers. Okay, so this Gramina model is applied in more than 58 countries, including United States. So this bank's borrowers, 94% of the bank, that is the Gramina bank borrowers, own 94% of the bank, okay, and the remaining 6% is owned by the government. So it is like a half and half, where Gramina banks are owning 94% and the remaining 6% is held by the government. The working of this model is where they have regular and usual weekly meetings they have, which is supervised by the microfinance institutions workers, the workers who are there, who collect and maintain the records where the savings is done, how the repayments are being collected and handed over to the mutual fund institutions workers. Okay, the workers will act as a representative, and they have organizing contributions to one or a number of groups savings funds, which can be used for the group for number of purposes. The purposes might be anything, okay, the group can use for, but it is availed as a lump sum, and usually with an agreement with the mutual fund institutions which maintains the group fund accounts. I have told you, no? So there will be a worker who will be maintaining and supervising the funding activities, that is saving and funding activities. And guarantee loans are also provided in this. What is this guarantee loans? Guarantee loans are given to the individual members on accepting of joint or several liability. Like if someone guarantees, then loan is provided. Even raising group emergency fund is also there. Like if any one of the group member needs emergency fund, then by accepting that no members of the group is able to take the loan until the old members pay the loan. The existing group members are not allowed to take a new loan until the repayment of the existing loans are being made. Okay, emergency fund is collected and then emergency disbursement is also being made. So these are some of the facilities which are there in the Gramina model. So there are 4 models: joint liability model, then you have cooperative societies model, then you have self-help group model, then you have the Gramina model. So these are the 4 models. I told you when it came to the disadvantages, that whenever you have a choice between the whenever you have a choice in the models, it is very difficult to make the choice. First you have to form a group, know what is the objective of that particular group, like whether it is to avail loans, whether it is to do any kind of activity. Do you already have the knowledge about it, so that you don't want any kind of intermediaries, you can contact directly the bank, or else you want to go through a joint, that is through the intermediaries like NGOs and microfinance institutions, like do you want to go through them? So there is a lot of options available, and each of the models are different from one another. So you have to wisely select the model which is very much relating to the group's objective. Okay. Then comes our services of microfinance. So there are different types of services which can be availed by the group members. Let's see what all are there. The first one is micro savings. Micro means small. Okay, small savings. Small savings in the sense lesser amount savings. Okay, there's a possibility to save money without no minimum balance. See, normally now in banks we need to keep a minimum balance, urban 3,000, metropolitan 5,000, then you have rural 1,000. Like this you have limitations. To open up a bank account you need to have the minimum balance. But here there is no minimum balance concept. It allows people to retain money for future use for the unexpected cost. If you have anything, any occasion which is unexpected, there is a wedding coming soon, or there is an health issue with the member of the group, anything like that, any possibilities to keep yourself prepared, you make these savings. So this in SHG, the members save small amounts of money as little, okay, as few rupees in a month, maybe 10 rupees, 50 rupees, 100 rupees, few rupees in a money to the group fund. Okay, they deposit to the group fund. Members may borrow from the group fund for a variety of purpose, ranging from just now I said, no, household emergencies to school fees. So any kind of emergencies, the members of the group can borrow the funds from the group fund. So as SHG proves that it is capable of managing their own funds well, they may borrow it from the local bank to invest in small business or for farm activities, and banks typically lend up to 4 rupees for every rupee in the group fund. Suppose you have 1 rupee in the group fund, the bank provides you 4 rupees. So if you have 100 rupees, it is multiples of 400. You are lended with 400 rupees. So either you can directly take the fund from the group fund. If the group fund is not sufficient, then you can rely on the banks, other banks, for the purpose of funding. So how do the other banks fund it? So if you have 1 rupee in your group fund account, they give you 4 times of it. That is 4 rupees. If you have 1000, then they give 4000. And recovery would be the responsibility of the entire group. Okay, so this is one of the service which is provided, which is micro savings. Okay, the next is micro insurance. Now, what is micro insurance? The name itself is telling you the meaning of it. Gives the entrepreneurs a chance to focus more on their core business, so that without any taking of the risk factors, they can concentrate on the core business, and which drastically reduces the risk affecting to their property, health and working possibilities. So all these are covered. There are different types of insurance. Life insurance is there, property insurance is there, health insurance and disability insurance, crop insurance, and these providers, it provides these borrowers with insurance at a lower rate and with lesser premium. So normally we can see ads of different insurance companies. They say when compared to the other insurance companies, we take lesser premium. So in the same way, this micro insurance concept also, it is for a lesser amount, low rate and with lesser premium and covers the group. So that is about the micro insurance. And then the third kind of service, it is micro leasing. So entrepreneurs or small businesses who can't afford to buy at full cost, they can instead lease equipments, agriculture machines or vehicles. Often no limitations on the minimum cost of leased objects. So they will not keep any kind of minimum slabs of offering it for the lease. Normally if they want to purchase any equipment, agricultural tools and machines and vehicles, full cost affordability is made. Okay, if they can't take who can't pay the full cost and take the machines or equipment, they can avail these leasing facilities. It is like owning your assets. And what is the difference between owning and leasing? I'll tell you in the next class. Okay, because that is a different concept. The entire topic is about leasing. I'll tell you what is the difference there. Okay, the next and the last kind of service is money transfer. Okay, the money transfer. So a service is for transferring money. It might be overseas to the family or to the friends, anywhere what they want, transferring of funds, where money transfers without opening any current account and performed by a number of commercial banks. Without even opening a current account, you can transact these money transfers, and through international banks also, where it might be the system such as Western Union or MoneyGram or Anilic. Like this, there are various options which are available to do this money transfer for overseas friends and family. Okay, these are the 4 services which we have learned: leasing, money transfer, insurance and savings. Okay, last topic, which is challenges of microfinance. So similar to the disadvantages are the challenges. What are the different kinds of problems which might come through in availing the facilities through microfinance? Those are known as challenges. So challenges are, like I've already told, that they have higher interest rate. So compared to the mainstream banking or the traditional kind of banking, the interest rates are high, and then it is over dependence on the banking system. So it is like their regulations, procedures, policies, budgets, announcements, these will make an impact on the functioning of microfinance. And then illiteracy and lack of awareness about these products. Normally, as these microfinance are concentrated towards the rural areas, people there would be a kind of uneducated and illiterate and lack of awareness. They don't have the awareness. Now people are not that illiterate or uneducated. They are slightly evolving, and they are moving towards the city for the purpose of education. But even then, the lack of awareness is still there. Okay, then you have this over indebtedness due to multiple borrowings. I just said, no, you tend to get a habit of borrowing, and there will be a multiple of borrowings, and it is you feel, and you all might be, some of them might be inefficient in managing the risk management and paying the debts at the right time. So this will lead to over indebtedness, and you hear about the farmers about their suicide. These are all the negative impact of this. Then regulatory issues. Yeah, I've told about the regulatory issues. The rules and regulations keep on changing, and you need to keep an eye on that. Okay, then you have problem in identification of appropriate model. I told you, while selecting the model, you should appropriately choose what according to the objective of your group which is being formed. According to that, you need to wisely select which model is preferable. Either it is joint liability, either it is self-help, or either it might be Gramina. Whichever model would suit your group, that you should go for. Okay, then you have information technology, which can help in financial inclusion. Yes, there is a lot of changes in IT which is happening, and the people or the workers over there or the intermediaries should give proper knowledge, and they have to adapt that. So that change would be really difficult. Okay, that's one of the challenges. And then government, it is playing a vital role, but even more interaction is required from the government's end, where they should provide training and they should provide awareness for the people in order to avail these facilities. In our country, the problem is that there are many facilities which are existing, but due to the lack of awareness, people are not able to avail them. So this is one of the major problems. Okay, so this is about these are some of the challenges pertaining to the microfinance. So let's sum it up what we have learned today. So we have learned the meaning of microfinance, where with small amount of funding is done, loan is taken, insurance is provided for the low income people, the small businessmen or small enterprises. For them, the facilities given. That's the meaning. And advantages and disadvantages. Advantages are easy funding, the hassle free is not there, and the debt repayment rate is very good, and the people who cannot afford or do the procedures of the traditional banking, they can avail these facilities. When it comes to the disadvantages, higher interest rate, it is over dependence on the banking sector. People don't have that much of awareness about the system. These are some of the disadvantages. And coming to the models, we discussed 4 models. As I said, joint liability, this model is very important. It is one of the important questions which come for the exam. So there is joint liability model, self-help group model, cooperative societies model, and Gramina model. And then we discussed about the services. What do these microfinance consist of? Microfinance consists of micro savings, micro insurance, micro leasing, and then you have micro transfer. Okay, Then you have the challenges, which are quite similar to the disadvantages, regulatory issues, problem in identifying which model suits the group, and interference of the government, sometimes advantages, sometimes disadvantages, and growing IT. These are some of the challenges faced by the people under microfinance. So hopefully you have understood the concept of microfinance, what I have done in today's class. Next we will be discussing about leasing. So meet you all in the next class. Thank you.